So tell me, what comes to your mind if I tell you the word technical patterns? Is it a head and shoulder top? Is it a hammer or a hanging man Japanese candlestick pattern? Do let me know in the comment section. But in this video, I'm going to walk you through the concept of patterns. Next, we're going to take a look at classical reversal patterns with the help of head and shoulders and double top, double bottoms. And of course, I'm going to share with you the fact that you can trade these patterns in 3 different ways. Yes, it's not that a pattern breakout is happening and you have to trade it in one way only. As far as I understand, we can trade these patterns in 3 different ways. So come on, let's dive into the world of patterns. All right, so here I am. This is my TradingView screen. I have an HCL Tech on the weekly chart open on my Heiken Ashi. Heiken Ashi and these examples of charts will come a little later, but what is important is to understand patterns. Now, if you ask me, under the subject of technical analysis within the concept of patterns, this very concept by itself is pretty wide. You can have the classical patterns like the head and shoulders and the triangles. You can have the Japanese candlestick patterns like the hammers, the hanging man, the engulfing patterns. In fact, harmonics are also a kind of pattern. In fact, if you ask me, price RSI divergence is also a kind of a pattern, isn't it? So there are various kinds of patterns under this subject. But if you are an amateur, if you're a rookie, a newbie in this subject, and you're just starting to learn about technical analysis, you will first face patterns with the help of Western classical patterns, right? And in Western classical patterns, I purposely use the word Western classical patterns because it helps me later to explain Japanese candlestick patterns. You know, patterns necessarily does not only mean head and shoulders and double tops and triple bottoms and all that. We can have Western classical patterns, we can have Japanese candlestick patterns, etc. And so if you pick up any of the basic book like a John J. Murphy or a classic basic book like a Edwards and Mangy, you will come to, by the time you are on the 3rd or the 4th chapter, you will come to the concept of pattern. Patterns are essentially a formation on the chart which the experts of this field 50, 100 years back, when they used to use those graph papers and used to plot charts by hand, these patterns, they used to observe them, they used to identify them, and they had a repetitiveness in them. And so they documented it, and that's how we have the Western classical patterns as we know. Now, this Western classical patterns can be broken down into 2 main types. First is reversal patterns, and the second is continuation patterns. Reversal and continuation. In this video, I'm going to focus on the reversal side of it, and I'm going to take the use of head and shoulder pattern and the double top, double bottom pattern to explain to you this kind of reversal patterns. So we are under the concept of patterns. We are within the domain of Western classical patterns. We are focusing on reversal patterns, and within reversal patterns, we're going to look at head and shoulder top, head and shoulder bottom. We're going to look at double top and double bottom. Of course, there are much more patterns than just these 4. By the way, I think I have shared this in one of my videos earlier. But if you really want to know more about patterns, Thomas Bulkowski's book, Encyclopedia of Chart Patterns, that's a brilliant source when it comes to this kind of information and understanding. So, without wasting much time, let's dive into what exactly is a head and shoulder top and a head and shoulder bottom. Please remember all the time that we are talking about reversal patterns. And so I raise the question, reversal of what? It has to be reversal of something, or else why will you call it a reversal pattern in the first place? So it's essentially the reversal of a prior previous trend. There has to be either an uptrend or a downtrend. There has to be a certain drift in the price, and then a certain pattern shapes up at the top and at the bottom, which leads to the reversal of the previous trend. So this particular pattern will lead to a reversal of the uptrend to the downside, and this particular pattern will lead to a reversal of the downtrend to the upside, and that's why they got the category of name and they call reversal patterns, because they lead to reversals, which means a prior necessity is a previous trend followed by a pattern, and then if I see the pattern after the trend, I can preempt, I can expect and anticipate that a reversal might happen. This is the concept of a reversal pattern, right? And within this concept, there are various patterns. In this video, we're just going to touch base on the head and shoulder type and the double top, double bottom type. Head and shoulder top also has a mirror image, which is called head and shoulder bottom. It gets the name head and shoulder top because head and shoulder top forms after an uptrend. So the basic necessity is an uptrend. After that, it will go through a shoulder, a head, and another shoulder. This one is the left shoulder, the top one is the head, and the right one is the right shoulder. Of course, the head will be higher than the left shoulder and of course higher than the right shoulder. These 2 points, if you join with a line like this is called the neckline. Neckline. N-E-C-K. If you want me to write them down, neckline. Neckline. When we have a formation like this after an uptrend, this kind of a formation can be very horizontal in nature. It can be upward sloping in nature, or it can also be downward sloping in nature. These are the 3 variations of head and shoulder top. We're talking about HNS top. It's a topping out pattern. Out of these 3, the third one is the most potent. The third one is the most reliable, but it's rare also. Most of the time you will find the second one, majority of the time. They can also be reliable, all depends on price action. Once you have a head and shoulder formation like this, essentially what you're looking at by the core of price behavior, you're looking at a higher high and then you're looking at a lower high. This fact that it has created a lower high is slowly bringing in slowdown or a bit of pessimism and bearishness. But wait, don't jump into conclusion right now over here that the market will fall or this chart will reverse. You have to wait for the breakdown, the breakout on the downside, which means the prices have to break below the neckline. This is the most important move. It has to break below the neckline, and then you can clearly confirm over here, yes, this is a head and shoulder top. We have a breakdown and we can expect prices to fall. When you wait for this breakout on the downside, the breakdown, wait for the close below the neckline. Wait for prices to comfortably close below the line. By the way, if you come to the head and you drop a perpendicular straight line to the neckline, you will get a certain vertical distance. Let's call it height of the pattern, the height. And if you take the same height, same calculation, same length, and if you subtract from this point, from where it broke down, it gives you a tentative target wherein you can expect the price to come down to this level. A successful head and shoulder top generally always comes down to this. Now, don't take me technically by the word of always, but most of the time is the right way to say it. Are these common? Well, not necessarily. But when you have a proper HNS playing out, this kind of a price behavior leads to a reversal of the previous trend. Volumes do play a role, but I personally will suggest give utmost importance to price rather than volumes. This is head and shoulder top. So you can understand previous uptrend, a reversal pattern which makes a higher high and then a lower high, a left shoulder, head and right shoulder. There has to be a certain degree of symmetry. That is, the size of the left shoulder and the size of the right shoulder should more or less be same. It should not be very wacky, zombie-like. No, it has to have a certain symmetry. And so this is a head and shoulder top. The mirror image is a head and shoulder bottom, which is, in this case, it's a downtrend. And after the downtrend, it makes a left shoulder, it makes a head, and it makes a right shoulder. And in this case, if I join these two highs, this is now my neckline. All right. This is the left shoulder, this is the head, and this is the right shoulder. You have to wait for prices to break out. This is the breakout. Volumes generally are very high when it's breaking out. You'll notice volumes to be very high. Once you have the breakout, wait for the price to close above the neckline. That's the most important thing. And once you have the close above the neckline, you can expect that the reversal pattern has played out, the previous downtrend has finished, and we have a new uptrend. Just like in head and shoulder top, these head and shoulder bottoms can also be like very, very horizontal, like left shoulder, head and right shoulder. It can be angling down like the way I have drawn it here, or it can be angling up also. The third variation, which is angling a little up, is the best variation. But again, they're rare. This is head and shoulder bottom. The same target rule can be applied here as well. We can come to the head, we can drop a perpendicular to the neckline. It will give us a certain vertical height. We take that amount and we add it. This, when we sum it up, when we add that value, this height, whatever is this value, when we add it from the breakout point, we get a target. And again, successful head and shoulders generally always try to meet the target and at times surpass the target also. Volumes play a role, but again, I will repeat, pay maximum attention and importance to price. How the way volumes plays out is as you move from left shoulder to the head and then to the formation of the right shoulder, you will see volumes picks up when the price goes up. Volumes will pick up. But again, I would strongly suggest that decide the final trade based on price. Head and shoulder top, head and shoulder bottom. Now, going to a topping out pattern, if let's say it's an uptrend and the stock makes a certain high, comes down, goes back to the same high and again starts to come down, will we not able to see very clearly a resistance shaping up more or less at the same level, more or less at the similar zone, similar area? When this happens, we call it a double top. A double top. A double top is very, very self-explanatory. A level which the price goes couple of times, meets exactly there, cannot surpass it, cannot break out from there, starts to come down. So in head and shoulder, what has happened is after the left shoulder, the head was higher. So there was still some buying. In this case, it could not go higher. It just went more or less at the same level and comes down. This is the most important level, this level. You have to wait for prices to break down. This breakdown is important. This is where the double top is confirmed. This is where the double top is complete. And now you can expect prices to come down. It's a reversal pattern. It will try to reverse the previous uptrend on the downside. Of course, over here also you can use the vertical distance. You can subtract it from this point and you can expect some kind of a target for this kind of a pattern. Double top. Now, when it comes to double top, I have seen personally while taking sessions and classes, the students will ask that, is this a double top? No. There has to be, see, these are subjective patterns. These patterns were visually seen and identified, right? So there has to be a certain sense, certain common sense, but not also too strict. I cannot expect that the prices will make two tops exactly at the same level by the decimal point. It's not sensible to expect that. So I have a simple rule of 1%. Right? So if the first one was at 100, top was at 100, then I can still expect a double top. It is if it's within 99 and 101, within 1% up and down, it's still okay. Right? So use a little bit of your common sense, which is not that common, your discretion, and as you see these patterns more, you'll get better at it. Double top has a mirror image. And you would have guessed it by now. The mirror image of double top is a double bottom. A downtrend bounces back from a certain level, comes down close to that same level and starts to bounce back again. So over here you have two levels, more or less. Again, the 1% rule you can apply. In this case, you have to wait, and the most important level is this guy, this one. This is what will cause the breakout, a move beyond this level, a close beyond this level, and then you can expect that the trend, the previous downtrend, has reversed on the upside. You can use the same vertical distance logic, add it here, and then it will give you some kind of a target. This looks like a W. That's a double bottom. That looked like an M. That's a double top. Pay more attention to price. Volumes generally starts to go higher as you tend to go up. But again, as I said, go for the price breakout and you will not be surprised to see that this price breakout is always matched with very, very high volumes. Some kind of a positive news leads to that breakout, etc., etc. So head and shoulder top, head and shoulder bottom, slightly complex. It has got three aspects to it, two shoulders and one head. Double top and double bottom are relatively easier. It has got just two, aspects, two highs or two lows. Now, when you go to your charts and you start to look at them, I use Heikin-Ashi. Heikin-Ashi, by the way, gives these patterns very, very easily. When I say gives this patterns, it doesn't serve them by a bowl or a plate. It's visually easy to identify them. One important thing I'll share with you. Do not go out looking out for pattern. Just do your stuff and do your analysis, do your research, try and find a trade. Do not push yourself that I have to look for a pattern on this particular chart. Let it unfold. Let it be so prominent that you won't miss it, like this double top over there, like this almost a double, beautiful, good looking double bottom over here. And can we call this a left shoulder, a head and a right shoulder? Maybe, but this is causing a little bit of concern because this shouldn't be happening. It's leading to a complex right shoulder, maybe two right shoulders. But as I was sharing with you earlier in this video, double tops, double bottoms are far more simpler. There's not much subjectivity in it, which head and shoulder carries with it. So you'll find it's much more easier to trade double tops and double bottoms. They are easier, they're better, they're simpler, and they're frequent.
than a head and shoulder top or a head and shoulder bottom. Right? How do we trade them? If you are a pattern trader, if I'm a pattern trader, if we had identified this double top or this double bottom, how are we going to trade this? And I shared with you there are 3 ways. Way number 1, which you will find in most of your books, is this is the breakout point. Once you have the breakout, this is where you buy, wait for the close, and expect the vertical distance on the upside, something like this, and this should be your target. So you mark the level, you wait for the price to go above the level, and the next day you buy. That's 1. 2 is when it gives you a throwback. A throwback is, which is not the case over here, is after it breaks out, it comes back and tests the level and then goes up. Many a time, if you see a pattern breakout, you will see that. It's a throwback. It throws back. So I have seen that many traders will not want to jump on board when it's breaking out because everyone is jumping on that boat. So they will wait for the throwback. The price you pay is, what if it doesn't throw back? Just the case over here, it did not throw back. By the time it threw back, a lot of move had already happened. The target also would have got met. So waiting for the throwback and not going with the herd can come at a price which is waiting for the throwback. The third way. Now, before I go to the third way, why will you wait for the throwback? Because many a times these breakout fails. In this example, which I have right in front of you, I'm talking and showing an example, a random example of double bottom. Happens to be a very, very good looking double bottom. But as you experience these charts, these patterns more, they do not always beautifully act like this. They will go up and they will reverse. So waiting for the throwback is for the sake of confirmation. And the third one, which I find is not a bad idea, is break down your trade into 2 parts. When you're getting the breakout, jump on board 50% quantity, wait for the throwback. And if the throwback gives you a further move, then add another 50%. If it doesn't give you a throwback in the next 2 to 3 days, then add some more. It's called pyramiding, adding to higher level. You can add the remaining 50%. Now, it's not like the third way is the best way. It's not like that. It depends on that particular trader's personality and what kind of trades he does. But on any charts, especially if you find these double tops and double bottoms, you can apply the same rule that I just discussed with you. The 3 different ways. You can apply the same rule for a double top, for a double bottom, for a head and shoulder, for any patterns, right? This is an Asian Paints on the daily chart, had a double top over there. And likewise, you'll find that there'll be many patterns which you would identify as left shoulder, head, right shoulder, breakdown, etc. etc. Patterns are wide. It's a pretty wide concept. Spend some time with patterns. Do not go out and look out for them. Let the patterns unfold. You will be able to identify. Right? This was the video on the reversal patterns, on the Western classical reversal patterns. I'll try and follow this up with another video wherein I will take up few of the continuation patterns which helps the market to continue. Right? But for this video, do let me know whether this was useful or not, and whether you trade patterns or not, and what are your biggest strengths and weaknesses you feel are there about trading patterns. Till then, take care of yourselves. Goodbye.